Hello everyone. So what is alternative investment fund? Let me give a very basic explanation. Let's say five people are there. They are coming together. They are pooling a fund. That simply means they are just contributing money into that fund. Let's say everyone contributed 100 rupees. Five people, 100 rupee each, 500 rupees are there. This 500 rupees will be invested into different things. Let's say some amount of money was invested into startups, some amount of money was invested into, let's say, those companies which are not listed on the stock market. This is referred as alternative investment fund. How is it different from mutual fund? In mutual fund also the concept is same, but the investment is usually into the stocks which are listed in the stock market. In case of alternative investment fund, this investment is into different other instruments, for example in infrastructure project, for example into startup companies or those companies which are not publicly available. That is the difference. Now why it was in news? Because recently RBI has given instructions and guidelines to the regulated entities. What is the meaning of this term regulated entity? It simply means the entities which are under the regulation of RBI, for example banks, for example NBFC, non-banking financial company. So what is the guideline? Guideline is that that means regulated entities should not have more than 20% in AIF. So if let's say five or seven regulated entities are there, they want to invest their money into AIF. The total amount invested into AIF by these regulated entities should not be more than 20%. The amount invested by each individual regulated entity should not be more than 10%. Now, let me simplify this entire thing. AIF means the fund which has been privately pooled. For what purpose? For the purpose of investment. That is alternative investment fund. Name itself is self explanatory. Now, different regulated entities, let's say different banks are going to invest into it. Let's say SDFC, ICICI, and SBI. They have invested money into it. The total investment by these banks or other entities should not be more than 20% of that AIF. That is one thing. Second thing is that the individual AIF, let's say SDFC. So SDFC should not invest more than 10% into that AIF. That is the meaning. Similarly, ICICI should not invest more than 10%. Combined SDFC, ICICI, and SBI combined should not be more than 20%. These are two important guidelines. Recently, RBI issued them in the context of AIF and RE, that is regulated entity. Thank you.